what? We've already passed kind of the bar that I set for like, all right, this is the number that I want to see before we can count it. So let's get rolling. Welcome to this Placer AI webinar. It's our annual holiday preview. We are going to do a quick introduction for those of you who are unfamiliar with Placer. We're then going to dive into our holiday preview. And we are also, there is a surprise odds and ends section for some topics that we are particularly fond of. And then we are going to end, as always, with some Q&A. If at any point you have a question during this webinar, please use the Q&A button situated at the top or bottom of your screen, depending on how you have Zoom configured. And we will try to get to it either during the course of the conversation or at the end of the webinar. But I guess the reason I'm so excited today is because it's not just our holiday preview. It's our holiday preview with Simeon Siegel. Simeon, thank you so much for being here today.
Hey, man, good to be back.
Yeah,
this both have different backgrounds this time.
I think it makes it exciting for us to mix it up, and now we get to mix it up right ahead of the amazing excitement that will be the 2022 holiday retail season. But before that, let's do that super brief introduction to Placer. So for those of you who are unfamiliar, who is Placer? Placer is a location data company. What does that mean? People vote with their feet. We're showing you how they vote across the United States every single day. We do that by observing a panel of over 30 million devices throughout the United States. Very critically, this is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then utilize machine learning and AI algorithms on top of that data to make estimations on visits to retail locations across the country. And we present that data in a wealth of different reports within our platform on everything from the customer journey, cross-shopping, void analysis, true trade areas, and a whole lot more. If anyone is interested, there's a free version of our premium product available at placer.ai that you can check out at your leisure. But now into the good stuff. It's time for the holiday preview. And Simeon, how could we possibly preview the holidays without talking about the current context? And so when you think about what the environment that retail is operating within, how challenging has this context been for retail? And I guess more importantly, how do you judge performance accordingly? Like, how much do you grade retail on a curve considering what it's facing currently?
So speaking of challenges, it's the first time I've done this in an office. And the problem with offices is that chairs kind of swivel. So keeping myself from moving around is its own separate challenge. So if I see myself going, just give me a sign, like stay still. So I think that what's fascinating to me here, and you and I were talking about this, is throughout this deck, you're going to have year-over-year, 3-year, and year-over-year comparisons. And at some point, we're going to have to just go back to year-over-year, and we're going to have to say, okay, this is our new normal, and we're going to go from there. But what we learned in the pandemic is there's no such thing as a new norm. It's just figuring out what today's version of that is. And so there's this interesting dynamic where the rhetoric is all about, hey, there's too much inventory. Why is there too much inventory? Well, that's less important. It's just that there is too much inventory. What do we do when there's a lot of inventory? We cut and we promote. And then we try to get people to come. And so like we're going to be looking at your traffic reads as this leading and lagging indicator at the same time to suggest, are these promotions bringing people back in or are they not? As opposed to going back and figuring out what was the problem in the first place, why was that inventory there? And so when you ask about the grading, what's really interesting to me is this snapshot in time, because normally the reason you cut inventory, you cut discounts really quickly is because people voted that they didn't like your product and therefore inventory ages poorly. Well, that's when inventory misses by 5%. When inventory misses by 50%, customers didn't vote against your product, they voted against all products. And so that's where this interesting dynamic where the traffic read, I wonder right now, and the excess inventory read that we have right now might be a very different version, might be a very once in a lifetime view of what's actually going on. It might just be everyone bought a lot of stuff last year or 2 years ago. So that every retailer bought a lot of stuff in anticipation that would keep on going. And now we just need to get back to a normalized level. So normally, long answer to a very straightforward question, normally grading is absolutely critical. And normally we know how we can read what happens to determine what the story is really telling us. I still think we're in this little bit of a cloud. I think that when pandemic hit and all of a sudden there was no inventory, it wasn't because everyone was so healthy, it was because there was no inventory available because of supply chain. Took us some time to get there. Then we had this massive surge in demand and everyone thought it was going to be this amazing best time in the world, all this great demand. And no, it was a pull forward, just took people time to get there. I think we might be seeing the same thing now. Now there's a ton of inventory and no visits. Is the world blowing up? no, this might just be a reset to some version of normalcy and health. It's just going to take us time to get there.
But I mean, I want to tap onto that because I think it's something that there is this feeling like we get too caught up in these cycles of extreme thought. Something is dying, something is the greatest thing ever. And there's no, this is a unique environment. Things are likely going to be level. I mean, how do you kind of push that idea across in this period where essentially it's been constant volatility in 22?
So listen, I want to throw out a lot of people listening here. You tend to have a great operating audience as well as elsewise. And what I want to be very clear is I'm fully aware that what I'm saying is a lot easier to say than it is to do, right? When you're operating, if there's no inventory, first of all, if you don't have the balance sheet to sit on inventory, then it's a non-starter. You need to monetize. But this notion of, wait, I have inventory and I'm supposed to follow the rules of getting rid of it really quickly so that I can start again, it's natural. And it's, again, it might be more difficult for your business, but it's easier to do today. And so I think that it's this question of looking out and looking in. And so it's like, on the one hand, I get a lot of criticism that I understand that, yeah, you're out here proclaiming this story, but you're not getting your hands wet or feet dirty or whatever that phrase is supposed to be. But on the other hand, if I'm doing my job right, I'm objective, right? So I'm looking at it that way. And so that's why I think right now, like you're saying, at the end of the day, we are all consumers before we are Placer amazing traffic aggregators, before we're analysts, before we're journalists, before we're buyers, before we're CEOs. We consume. And so the problem with that is you bring your own, it's very hard to leave that baggage at the door. And so we're in the business of telling stories, and those stories become very exciting. And the death of retail is much more exciting than the ongoing status quo of retail, right? And the retail renaissance of COVID is much more exciting than, hey, you know what, we're having a catch up. But the numbers ultimately, and you and I love talking about this, the numbers can tell you the actual fact as opposed to spinning the story. And that's what I think is important. I think discerning fact from story is always what's going to be important. The stories are always, as they should be, they're always going to be hyperbolic.
I mean, it's a very good point, and I think it kind of bears a lot of repeating. I think one of the things that we have seen is at least some signs that discretionary spending is rising back. How confident would that make you for the holiday season? Do you think that trend will continue, or do you think we're just seeing kind of a normalization of what we had seen already?
So what I should have had you do is you and I should have talked in advance. We should have figured out, how do we create replenishment arcs? So like my big thing right now is that there is this, again, going back to rhetoric, there's this view that we're in a huge consumer-led recession and it's high income versus low income. And listen, obviously inflation hurts low income more than it hurts high income. That's just math. But I think what we are seeing is that what is selling versus what is not selling is not a question of people, it's a question of product. Because to your point, there are certain products that are showing us the rebound. There's certain products that never showed us the drop yet. And the way that I think about it is it's all about your replenishment arc. And what I mean by that is, it doesn't matter how much gas or how much cereal or whatever you ate last year, you need to buy more of that this year. And therefore those items are inflationary and they're hard to come by. That's a very quick replenishment. If you go to the other side, like let's go extreme here. Patio furniture, Pelotons, grills, whatever, right? Very low replenishment arc. Those items are incredibly deflationary. We're seeing all this promotional element because they have a lot of inventory that they can't move. But there's stuff in between. There's Nike sneakers, there's Bath and Body Works candles, there's athletic, like there's just a lot of different things along that arc. And so my ultimate point is that we are trained to think about companies' worlds in annual terms. How big is the company? It's either a valuation number or it's an annual revenue number. But the customer didn't shop in annual terms last year. Customer bought 18 months worth of sneakers in 12 months. Again, I don't know what the number is, but if we could figure out that number, we would know exactly when revenue should come back. So the thing about that is, if that's true, if you take my hypothesis as being true, then it means that it's not about a 2 or a 3 year trend line. It's about understanding that the next 6 months, you should sell literally 0 sneakers, right? And again, I'm being hyperbolic here, but if they bought 18 months worth in 12, then you need to let me work through that excess 6 before I'm ready to start buying again. And the interesting dynamics, doesn't matter how much everyone raised price last year and everyone tracked all the consumer chased it. So there was no price elasticity on the way up. I don't think we should expect there should be much on the way down. Doesn't matter if I've got 50 scented candles. I use this example a lot, but if I do, I make them $3. I'm not going to buy another one. I don't need it right now. Let me work my way through holiday and burn my tis the season and apple snow winter holiday, whatever sense, and then I'll come back. So I think there's that element there. And so that's why I think when you look at this, it is interesting where if the business has not yet replenished, I actually think holiday should be really weak on the top line. But I think if you can appreciate that, then the answer is not to promote for it. Because if that's the case, if I'm not spending, and again, I understand, right? I mean, there's clearly a low versus high income from an inflation perspective, but low income are still spending in areas, plenty of areas that are arguably discretionary as well. They just are faster replenishment. So if that is true, then that's much more exciting. It's much more optimistic for next year. Because if you work your way through the replenishment, if they're not buying, if people are not shopping because they choose not to, because they already have so many of these things, as opposed to they can't, then once they have to buy them again, once there's that catalyst, and you and I are going to talk about back to school, but if your child grew 5 inches, you bought another pair of pants. So I think there's that interesting element where I think that holiday probably still has some stress, right? Probably still has some area, but it makes sense. It should, because there's still plenty of things that I do not need another grill right now or a Peloton bike. In 3 years, I will. So find something shorter on that replenishment arc that will make its way through holiday, and then come 23, I'll be back. So that's why the product, I think look by product as opposed to by people, and I think you'll find varying levels of health.
Super interesting perspective. Also, kind of a great shout out to Bath and Body Works candles, which I mean, just objectively are the best.
They're promoting this one, right? They're the ad.
Yeah,
right?
they're the sponsor.
I'm supposed to drop one name, hashtag ad or something.
At some point, I'm going to lift out mine and be like, and my favorite flavor is. I do talk about them a lot as you get free shout outs. I think this is a super interesting perspective. I think one of the things we've talked a lot about, this was obviously a big topic last year, was the idea of the early shopping season. And we're seeing that kind of come back. And, I would say that if you look at kind of the end of this chart, we're looking at weekly visits year over year for superstores. And you see that the lowest decline in this kind of last few months is late October, which, by the way, is the comparison to to a really strong period in 21 of this kind of chart, one of the stronger periods. So it's you're seeing strength on strength, and yet visits are coming back, showing the kind of this power of this extended shopping season. How important do you think it is, and what are the steps that retailers can take to maximize the opportunity?
Well, have you accounted for the Rosh Hashanah calendar shift in this one?
I didn't. There's no.
The very rarely cited late Rosh Hashanah. I think this is, listen, I think obviously superstores are interesting because now we are on a year-over-year comparison. So we're going back to strength then as well. So when we're comparing that, but I think the notion of catalyst, I wonder how many of those October 3rd less bad came from chocolate sales as we get closer to Halloween, right? I mean, it's still maybe early, I don't know, but like you thinking through, what do these mean? Are there catalysts? Are there reasons to come through? Yeah, I think in a world where we're hearing increasing negativity, seeing your bar chart over here is hopefully about to go optimistic, because let's be clear about something. Less negative is still worse than it was last year. So if this never inflects positive, then it doesn't get exciting. The point is, if we track your run rate here, it would look like we're about to get an exciting holiday. Now, it does go back to this notion of superstores versus like where people are shopping, and you and I will always do talk, and probably will talk about consolidating trips and what are you going for. But yeah, I mean, you can't not look at this and say, okay, hopefully we're about to go positive.
Yeah, I mean, I think it's, just look at the tactics that are being utilized. We're going to talk about whatever. I'll say the Target love for a second, but I think there is this idea almost, I think I've come to think that whenever everyone says it's going to be bad, that's exactly when things start getting better. For both conversation we were having earlier. I think another one of these conversations, so we talked a lot about this kind of extended early shopping pattern, but then there's also a lot of discussion about kind of Black Friday. And, clearly these have taken a really significant hit in recent years, but are also part of this longer downward trend of the significance of those days. Do you think that 2022, with this kind of potential return of like intense doorbusters and kind of heavily discounted prices, could drive a fuller recovery for Black Friday this year?
Yeah, so listen, it's interesting. We have to set aside obviously COVID, because I'm nowhere near smart enough to understand the new variants, and I know we're reading about that. So that could be relevant. So let's ignoring that and setting that aside. I think that people are more excited in general. And I think that the notion of there will be discounts for the first time, or exciting discounts for the first time in a while, is a positive. But I do really want to balance that with this notion, again, going back to let's pick on Bath and Body. They will be promotional, right? Those candles will be on sale. The question is, do I need them? Do I want them? And so I wonder, I mean, I'm stepping out of my pay grade here. I have no authority to say this. I wonder if there's going to be a scenario, and this is more your wheelhouse. I wonder if there's a scenario where we see a better mall traffic read, but a worse store traffic read, or like if you could track conversion, right? I wonder if you would have people that say, hey, I want to go visit. And they're looking through and like, wait, do I need that extra t-shirt? Do I need that extra? Do I want it even if it's discounted? So I think there will be discounts. But I think this replenishment piece is going to be something that I'm going to keep an eye on.
It's a really good point, and it's one that, we're going to have the mall conversation in a little bit. But I do think this idea that if I can get people in my location, what do they do? And you're right, the Bath and Body Works is interesting because in the mall you have this wider sense of competition with everything else going on. But if I can get you into my retail store, there's almost this sense of like, I mean, what did I come from? What did I come for if I don't buy the candle? And I wonder how much that boosts, even maybe not the same level of sales, but sales nonetheless.
Well, and I want to be clear about something. I don't really know if I want to be invited to the Chernovsky holiday season if the companies we're looking at for Black Friday shopping are BJ's, Sam's Club, Walmart, Home Depot, Lowe's, Tractor Supply. Like, it just does not sound like those gifts are going to be all that fun. So I think as we think about the Black Friday group, I'm going to gravitate more towards your top right, and then maybe throw in a little bit more fun things.
Yeah, you know what?
A lot of building getting done.
See, like if you met my dad, Michael Chernovsky loves building. I love wholesale clubs. I'm not going to apologize for it. I think when we think about kind of retailers that are well positioned, and we think about this from like a trend perspective, we've seen kind of mission-driven shopping return. We've seen this orientation towards value, potentially trading down. For you, what defines the brands that are well positioned for the holiday season? And are there any that kind of really stand out for you as ones you're excited about in the coming months?
Yeah. So listen, I think it's not an important question. It's the question from my seat. So the way that I think about it, and again, you now know this framework of the replenishment curve. So anyone who disagrees with it can then just kind of disagree with this next point as well. But within that context, what I'm trying to understand, we know there's excess inventory, full stop. The question is, who's going to win because of the excess inventory, and who can win in spite of the excess inventory? The who will win because of the excess inventory is probably just the obvious. It's probably just the off-pricers, right? If we think about it from that perspective of who's going to collect all of that excess and who's going to effectively watch the ongoing down pivot to them. But who can win because in spite of it? And what's interesting there, and we have never spoken about this one, but at the end of the day, Michael Kors, right, the parent of Michael Kors, Capri, has been very vocal that they gained a tremendous amount of margin. They gained a tremendous amount of brand equity over the last several years. They don't want to give it all back. They don't want to give that margin back in pursuit of market share. That's not normally what you hear from a publicly traded company, but there's something to that. And so I think that if you can take that, if you believe that we're not walking into this massive global consumer recession, which again, if we are, people are going to buy fewer handbags, there's no way around that. But in the context of what we have, operating within what we have, I think TJX will get a lot of that excess Nike that we heard about a few weeks ago. But I think Michael Kors is telling us that despite having excess promotions across the board, we're going to stick to our health. We're not going to succumb. And so that's an interesting, like it's a different type. Normally we think about barbells as high versus low or whatever it is. To me, it's who can win despite or in spite of the excess inventory? Who's going to not give away everything that they just earned over the last 2 years?
That's such an important point, because I think we were talking about this. I mean, maybe it was a year ago that Target had earnings and their sales were up, but their margins were down, and there was a lot of negativity. And our thought process at the time was, it doesn't make sense. Target's basically keeping their prices stable for their customers when they would otherwise go up, and that's going to induce even greater levels of customer loyalty from our perspective in the long term. And the same thing for what you bring up with Michael Kors of they're thinking in the long term. So, I mean, this is one of those examples where if you see their sales down, aren't you still like kind of bravo? This is what you would want to see if you're someone who believes that that's the right approach.
if I really believe that consumers spent more than 12 months worth of revenues, then the corollary is I have to be okay with the fact that the revenues are too high, right? I think that if we were to look back, and no disrespect to anyone who's listening from Old Navy, this is not a bad thing, it's a good thing, but Old Navy historically did call it $7 to $8 billion of revenue every year before the pandemic. Pandemic year, they did it over 9, right? Like, if you think about Nike did whatever 14.5 to 16 billion of North America wholesale sales every year, and last year they did 18 and change. Like, you just watched a lot of companies oversell. And so if we believe that those numbers are too high simply because they didn't operate in a normal 12-month time period, they operated in a pull forward time period. And again, Peloton is the perfect example of this from an extreme perspective. Everyone can, I say Nike and Old Navy, and it's like, well, did people really buy more? Like, everyone now knows they fought it. Right? Everyone believed there was going to be an expansion of demand, but at this point it's understood to have been a pull forward demand. So Peloton's a good example of this. But you had an instance where very clearly the amount of revenues was borrowed revenues from the future. And so if that's the case, then the definition is revenues have to be lower. So yeah, I think if you can see a company that you believe is doing it on purpose, watches revenues go down and margin is elevated, understand that it might not be the most pleasant of experiences for the next 3, 4, 5 months, but you're going to walk out on the other side. And most brands, unfortunately, are giving back all that brand equity, which is very reminiscent of '08, as opposed to reclaiming all that upper hand, all that leverage, which is what we got in the 3-month period in the end of 2020. And that's what I think is, to the extent you can. And again, I recognize it's easier said than done, and I recognize you need to make sure you have the liquidity on your balance sheet and the cost of carry for a product, all those things I get. But if you can, people didn't vote against your product, they voted against all product. Therefore, this notion of promoting is actually a very different promotion than we normally would have.
I think it's a really important, and it's kind of a reflection of what we talked about earlier, of not over exaggerating to some of these narratives, having that consistency of thought. A question did come in. Are people shifting their timing because of fear of out of stocks, buying Halloween candy early because they might be out, the out of turkey for Thanksgiving myth on the news, except for those people who don't have the money until payday. So we have a different split in purchase timing. So early shopping are for those who are afraid of missing out, and those last day shopping are for kind of those who are a little bit more paycheck to paycheck. How do you see that challenge?
Are we hoarding? Right, that's the question. So we're back to toilet paper. It's interesting, right? Listen, the question is catalysts. When do they take hold, and do they take hold? So it's an interesting psychographic question of, do they take hold for different people at different time? I guess the answer is yes. I mean, that seems to make a ton of sense. I promise I didn't intend to talk about Bath & Body Works the entire time, but it's an interesting point. About a month ago or so, they came out and said they put out Halloween early and saw great results. And people are buying Halloween already. And it's like, once it's out, it just inspires it. So that's different than picking up candy right now, right? Like, you don't necessarily need your pumpkin scent candle, maybe you do. But you definitely, I think it's fair to kind of assume that there's different levels of planning, different levels of grabbing. It makes conceptual sense.
I mean, I think, by the way, at the very least, it just gives this if you're a brand that has a better margin if they sell in store versus selling online, you're catering to that early oriented shopper when you weren't before. So having it, I mean, how much could it really hurt?
Well, so the interesting question will be, and you'll be able to see this before anyone else does, if it's a pull forward, right? I'm talking about annual pull forwards here. If this is a monthly pull forward, then that Halloween boost that you might normally see, the next time you and I are doing this, you can hypothesize that we're going to have a big drop, right? So if the argument is everyone did their Halloween shopping earlier, then unless it's supplanted, right, unless that end of October is now we're pulling out November even earlier, which some are, but like, that's going to be an interesting dynamic as well. Is this just a massive? We're hearing half the reason that inventories are so high because everyone has this in transit inventory that they're pulling, the companies are ordered early. If that becomes a revenue thing, then we're going to have a new form of seasonality. So it's probably not going to be as aggressively stated or appearing as much as we just talked about, but it'll be an interesting question.
That's very interesting. So now let's talk about kind of those that maybe are not as well positioned. And one of them, when you called out, well, maybe are there specific or characteristics or traits that you think are uniquely challenging for a retailer to possess? And are there ways to kind of overcome these challenges, or is it's just going to be a difficult couple of months?
So again, if we work under the premise we were talking about, looking at down 5 to 10 isn't necessarily the worst thing in the world. The overlay here would be, what's the profit behind it? So simply looking at it in a vacuum, listen, obviously the lowest one on your table here, Bed Bath, which I do not cover, has their own questions. But the others are generally somewhat clustered. And so the question becomes, is it proactive? Is it the consumer? Right? Normally, if it's clustered, it's probably not being done by the company. And I think, honestly, the margins would argue the same thing. So, yeah, I think I look through this and I say, listen, at the end of the day, what are you selling it to who? If everyone here is selling athletic activewear to a consumer that is pinched, are you getting knocked on both sides? Whereas if you sold formal wear, go wear back to work for a bit, and you hit the right trend. I mean, there was a certain time when that was working. So I think it will be more nuanced than broad brushstroke if they choose to do it. Now, what you can reply to me is, okay, this is a great story you're pitching. Is anyone going to buy it? Because if they don't, then what's going to happen is everyone's going to promote, and it's going to be 2008 all over again. And so that will be the question. I mean, I can say it as much as I want. If people decide, hey, you know what, there's no revenues, we're public companies, we need revenues, we're going to move these units and we're going to discount to do them. Yeah, that's not very exciting. And that is probably the easiest story to envision.
Yeah, it's fascinating to see. I mean, this is when you were on a year ago on the reverse of, how high costs were going to be and the opportunity that existed for retailers. Because as a result, I mean, it's going to be interesting. Here's the first sign of pressure on that opportunity they were given. How quickly do they fold? I mean, it is a very, very fascinating topic. When we think, we talked about this a little bit, are there, from your perspective, and you did mention this a little bit earlier, are there specific shopping center types that you think are better positioned for the holidays? Do you think that malls possess a specific advantage during the holiday season?
By the way, check out the bottom left. I'm assuming it's not mirror imaged, but the bottom one where the indoor malls are down 3-4, the open air lifestyle, right? I mean, both down like low single digits. And then you've got their anchors, the department stores and the clothing, which are down double digits. So you tell me, I mean, I assume there's a function of fitness and other new and tenants are taking over. But from a weighted basis, I wonder if that will equate, or if this goes back to the hypothesis we were talking about at the beginning, where it's just that, people are coming to the mall because they're excited to get out, this is a hangout, but they're not actually going into as many stores. I don't know. I mean, do you have a view on that?
Yeah, I mean, I am maybe overly optimistic, but that is, some people are pessimists, some people get to be fun loving and optimistic. I mean, I just feel really
you calling
great.
me negative?
No, God forbid. But I think malls have this really amazing opportunity because of decisions they made 5 to 10 years ago. They shifted away from the same focus on apparel. They focused on experiences, and they're starting to benefit from that. And then, not to give away, one of our big end of year, predictions for the coming year, this is going to have a waterfall effect. Malls, it's going to be kind of a jolt because this primary narrative we've been hearing, especially pre-pandemic, the country's over-malled. Country stops being over-malled if there's more differentiation between the malls. The country stops being as over-malled, at least, if there's more excitement in them, if they're able to generate more urgency because of new elements. I think malls, and especially the top tier malls, are very well positioned. And what's amazing is this is not a function of luck. This is a function of very smart decision making, playing it out over time, and then having the right things happen.
So just to be clear, I'm a colossal proponent of stores. I mean, if anything, to me, the disruption has been the confusion. I think stores are the best, wholesale is second best, right? Like, it's this notion of digital and DTC have I think confused the story a little bit. The best way to shop, the best way to sell is always going to be in a store. You want to complement, you want to supplement, you want to have other. Omni-channel means everything. It just doesn't mean just e-com. But no, I agree, and I think a lot of companies pushed and figured things out. Do you and I think that that's done? Do we think we're at the perfect level of where malls will be? Obviously not. And there's plenty of very big companies that are still going to be pulling out of malls to try and go closer to the Ultas and the TJs and the Whole Foods, et cetera. But I think we're in a totally different spot. And I think similar idea, the death of the mall was a joke. I mean, that was not a truism. That was a good story to tell.
Yeah, I mean, a point did come in that, it says you need to see more malls to understand how strongly they still focus on apparel. 100% true. This was a little bit kind of hyperbolic, a little bit to the extreme, and that's my fault. But there are definitely a lot that are way too far in that direction. But I do think it is worthwhile calling out those that have made that shift and the benefits that they are seeing as a result. But yes, there's definitely still an over-reliance on certain types of segments, and that is a long-term challenge. Absolutely fair point that came in.
And my point was just very quickly was the idea that you can have an instance where a mall might outperform the store, right? If a mall becomes a hangout, you may have a mall that's down less than the actual stores if people start viewing it. If malls do their job and they're experiential, you can have an instance where they outperform the stores that are in them.
It's a very good point. I think when we think about like the big trends that we've been discussing, trading down has been a major one. The return of mission-driven shopping, where people are spending longer durations, even though there are fewer overall visits, and looking to accomplish more with each visit. Do you think that these two trends will play a significant role during the holidays, or do you think they will start to fade?
Yeah, so it's like hunter-gatherer, right? It's like interesting. It's always, do you spend more time in one place, or do you just walk in and walk out? So you can look at this both ways. We have a consolidation of shopping and visits, therefore minutes should go up. Or do we view it as more transactional, and it's just like, hey, I should be in and out, and if I'm staying there longer, it means you're doing your job a bit less good. So I think this figure can tell a lot of different stories, and getting the rest of it is probably helpful, right? Like seeing it versus the others. I think it's also interesting that Walmart apparently kills customers that stay in longer than 30 minutes. So we're very level there, where we chop off the top. So understandable. But no, I think that at the end of the day, if you are consolidating visits and you are more experiential, then this is what we should be seeing, and we should probably be seeing it increasingly happen. If, on the other hand, these were big beneficiaries of discretionary purchases, and that's now going to normalize and taper, and some of the others will find their way, then we could be seeing a reverse. So that was like an amazing answer where I gave you like 18 different decision trees and not one answer. But I think that it will be, this is one that's very interesting. You could spin a lot of stories that have very different conclusions looking at this data.
That's very, very fair point. And that's, by the way, the fun thing about data is we can all look at the same thing and come up with different conclusions, and that's why it makes it so interesting. But
is this AMC giving you the finger? What is this?
Yeah, obviously, because they're telling you how much better they're going to do than what you expected.
Look at that. What figure that one is.
I know, right? That, by the way, that is the difference of July 4th weekend happening, July 4th landing on a different week than it did last year, which is why you see that huge uptick. Also, Top Gun Maverick, which, if anyone, we're going to do another webinar just focused on how amazing that movie was. One bold prediction for the holiday season.
You're going to the AMC slide and asking me to make one bold prediction?
I mean, I want to get the.
If you're gonna go meme, you gotta start. I'm not starting with a meme. Listen, I think one bold prediction that I would hope would be companies are actually a lot less. I think it is understood status quo. There will be a lot of promotions. I think the boldest prediction is you look at some that actually say we're not going to participate, even if it means it's going to hurt us. I would love that. That's a bold hope, even more so than a prediction.
I will say to anyone listening, last year I think there are two people I give credit for being ahead of the inventory trend, and you are one of them. And this year, this is another big one, and I think the logic makes so much sense. And now to the final section, to two topics that you and I both love very, very much, and it's digitally native brands and direct to consumer. And I know you have an interesting take on this, and there has certainly been a lot of excitement around digitally native brands, product-oriented companies, as they kind of expand their own retail locations and look to have that kind of direct to consumer experience. But there have been signs that it is not as easy as open up stores and then, if you build it, they will come. How do you see the direct to consumer digitally native brand trend heading? Like, where do you see this moving in the longer term?
Yeah, I like the question of where is retail and then where specific companies. And I think if you get any more specific than retail, but don't get to the specific company levels, you're probably overgeneralizing. And so what I mean by that is, listen, what we are finding last year, you and I talked about a report my team did called DTC is Not All It's Cracked Up to Be. And the whole premise was, don't walk away, don't sleep on wholesale. It's a great channel. The reason these brands are as big and healthy as they are in the first place. And the argument was, no, if I go direct, I get rid of the middleman, life is good. a year later, so where we are right now, no, that was very contentious and controversial when we did it. Apparently, then I had a lot of pushback. I don't get much pushback on it because Nike is showing us quarter after quarter that they're still a great business, but as direct goes up, the rest of the business does not. So I think what we're seeing here is, listen, you've got Warby up here, which increasingly has stores, right? I mean, we're watching companies like Allbirds, which have wholesale. So this notion of remembering of like Back to the Future or Future to the Past or whatever is be a retailer, right? Find the partnerships. Don't give everyone your business. Don't wholesale everyone, and don't open a store in every MSA. But like at the end of the day, figure out where you can do your best business with who are the best partners. And I think that's what we're seeing. And so this notion of like the digitally natives being a different class, I think is evaporating and fading, only insofar as like the last identifier is not making money. Like there's very little positive identifiers of being a digitally native at this point. So what you don't want is to be lumped in with a group that's not profitable. So I think increasingly like that's the focus you do there. And then your American Dream one's fascinating there. And I saw your post on Beast Burger, but it's like, listen, this is the epitome of a mall in theory, right? That has just a lot of experiences. So I'm not up on their performance, but like looking at this, I think like you go back to what we saw before of can you have an instance where the mall outperforms its stores? They'd probably be a very interesting case study on that.
Yeah, absolutely. I just think the idea, apropos the malls getting stronger and what they're doing well, this idea that just thinking differently about the types of tenants, it's such an important element. But your point about Nike is also, I mean, I think it's almost like the common theme here is nuance. Like, don't get overly excited, don't get overly down, have a consistent, clear strategy that makes sense and then is executed over time. And I mean, apropos that same thought, does it apply anywhere more than fitness? I mean, we were sitting here 2 years ago and I think literally it was June or July of 2020. And we were like, no, fitness is not dying. Yes, Peloton is great and connected fitness is growing and important, but it's not as incredible as we think it is right now. And fitness is not as in a bad of a place. And these things, I think we're almost in like the reverse. So that leads to this question of, do you think like the unique success of fitness in the physical environment has seen will continue? And I will add to that, something we don't normally touch on. Do you think that something like Peloton in that digital space will rebound?
Yeah, so let's do the second first. So I think Peloton pulled forward. I don't think Peloton's, listen, I love the product, right? I don't think Peloton pulled forward 18 months of demand into 12. I think Peloton pulled forward a lifetime. I think Peloton grabbed a lot of people, and the problem with recurring revenue is that at some point, all people churn, right? So there's a shot clock that starts. So as soon as you start paying, even if you have the lowest churn, it's understood by definition, lifetime value means you die as a customer at some point. So if that number is 12 years, I think it's probably 3 to 5, but if that number is 12 years, well, a lot of your best customers started 3-4 years ago. So for Peloton, every day they need to find a new customer. So I think like Peloton is a little bit different. Do I think connected fitness dies? Absolutely not. I think connected fitness has opened up. Listen, the same way e-com came along and everyone initially said there's going to be no more stores. And then all of a sudden it became, hey, there's Omni, it blends in. If it's like, it's going to be the same thing. We're going to have blended fitness or harmonized fitness to quote our friend Steve. So I think at the end of the day, that does make sense. I think that within even this one, though, there's a lot of nuance because a Planet Fitness, I would venture to guess, looks a lot better than some of the other high end and different pieces there. And I think that that's going to be this notion of people want to get out, people want to work out, people put this in. But I would say saying fitness as a general rule, there are probably a lot of gyms that look at this chart and say, it's not what I'm seeing.
Very interesting. Yeah, I think this idea, to quote Steve Dennis, who, by the way, was on this webinar just a few weeks ago and has a brilliant book called Remarkable Retail. If anyone is interested, feel free to email me. I'll send
Second
you the link.
edition.
Yeah, I mean, obviously, I'm not going for the first anymore. You got to need both. But there is, this idea of things kind of being utilized together is so important. And you're wondering when that kind of breakthrough is going to be, where how do these brands figure out how to work together? I can stream my classes through someone else's platform, et cetera. I think this digital platform concept is obviously not new, but the physical space platform isn't either. I mean, it's about how do you leverage these elements together. A question came in. Many businesses are open less hours for staffing availability, for wage costs, sometimes for lack of safety. How do you think this is going to impact visits and purchase behavior?
So I'll take the first, you should take the second. So I think that if what's happening with retail is it's more intentional, then it shouldn't matter, right? Again, that's not fair. If people can't fit the hours because of working hours, then obviously they'll have a huge impact. But if it's a function of I just need to plan my visit differently, then there'll be a delta there. But if it's people are in the mall and they're just hanging out and they're like, if you believe in co-tenancy traffic, then obviously that can have a big impact. I think taking the step further is it impacting the customer experience. Why do you go to a store in the first place, right? I mean, we've talked about this a lot. I don't think people like e-com. I think they like convenience, right? I think they like an offering. And so at the end of the day, there's nothing more convenient than sitting on my couch in my underwear on playing with my laptop, right? But if I can magically be transported in the Chernovsky home to a Home Depot aisle, then I'd much rather be there. So if the staffing part, which is a very critical part of that, starts to detract from the experience, then that'll probably be another conversation of, okay, should I just go online? So I think obviously wages is going to be huge relevance, or labor is going to be huge relevance, because there's not enough people, but they also cost more. So in that environment, if we're talking about deflation from a revenue impact, but inflation from a cost impact, then that's going to be a little bit of something to deal with. But I mean, that's kind of how we're looking at it. But you should take the dwell time side because you've got the data.
I mean, I think it's what you said. We are seeing kind of more intent-driven visits, and we expect to see that, especially in October in the early season, where you're likelier to have that. I think there is going to be something more to be seen in the coming months of kind of what are the wider challenges and what are the wider kind of implications of some of these trends. I think the intent-driven shopper is going to be there, but I think even more than that, this mission-driven shopping trend, I think it's something that benefits them all. I think it's something that says, how can I accomplish more with a single visit? So how do I go to a place that can allow me to do more? Also, it's winter, it's colder. Like these are traditional benefits for that more holistic experience. With that, I want to obviously, Simeon, thank you so much for joining us. It is always a pleasure to have you. I think you're part of, like, if the SNL is the Five Timers Club, you are in that club for us, and we really appreciate you
Do I
joining.
get my plaque?
Yeah, of course. And you get to be part of the skit
Now
that we do.
when I'm
when
in
more
the
people
office,
join.
I've got nothing here, so I need something to decorate next time.
That is the next bit of swag we will be creating. Thank you everyone for joining us. We really appreciate it. If you want to sign up for that free version, it's at placer.ai. We're going to be doing our next webinar in just a few weeks, so please check that out. I think it's our shopping center myths and facts webinar, which is one of my favorites. And so please make sure to join us then. And if we don't get to see you before then, have a wonderful holiday season. I think this is too early for that, but let's see what happens.
It works. Or a great Halloween. Buy some chocolate.
Yeah, whatever the next thing is that matters to you, we hope it's great. And so have a wonderful day, everyone. Thank you so much.